Luke, I'm sure there are viewers out there in the audience watching right now, and they might be looking at Wall Street at all-time highs, but saying prices are rising for them. And there are questions about the housing market as well as labor market as we head into this year. So first, because you mentioned private credit, what do you make of what's happening in terms of competition, and what are the takeaways from the big bank earnings?
You know, if you're a small business owner or a large business owner, your wealth is tied to the success of the business.
Yep.
So a lot of the people that maybe aren't in business think that, you know, all these corporations with the tax cuts are going to put more money in their pocketbooks. That's not the case. That's not how it works. You want to grow the business. Maybe you're not paying yourself initially, but if your stock price goes up or your revenue goes up because you're hiring more people to grow it, your wealth is increasing. That's how business works. So my point is with that is, I think a lot of these corporations are going to be investing in personal capital, personnel, software, and that's going to go into more pocketbooks. So when it comes to housing, what we'd like to see happen is housing stabilize. You know, all these kind of inflationary pressures stabilize, but wages increase. And I think that's what's going to happen next year. You're going to see more wage growth than you've seen in a very long time, more money in people's pocketbooks. But again, does 4.5%, maybe 4% wage growth compared to 2.5% inflation really make a difference? You know, 1.5% over inflation, you're not going to feel it greatly at home, but that growth is something we haven't seen in a long time.